Joining us right now, our panel, Brett Sifling's with us, Director of Get Invested, Gerber Kawasaki Wealth Investment Management, and Logan Gillen, Analyst at Jewel Financial. Brett, what stood out to you? I mean, this group, I've been saying the SMH, for example, has had the worst start since its inception. And then I was looking at the SOX earlier, a 20-month low. I mean, it's just the group's having a hard time.
Yeah, Nicole, really the entire market's having a tough time. I mean, semiconductors are not out of the woods, whether it's the weak macro backdrop from inflation to the Fed raising rates to supply chain issues to war. It's hard to find optimism in the market, but ultimately, this is a good time to put money to work in the sector, using strategies like dollar cost averaging. We do think that the entire sector has entered a more secular period rather than their traditional cyclical attributes. So it's a interesting time right now for sure.
All right, I want to hear more about some names that you like. Logan, what do you think?
Yeah, I mean, I agree with Brett. I mean, this sector has been absolutely hammered, just like a lot of different areas in the market. The uncertainty is really with the future of supply chains and of the economy is what you're looking at with a Micron. And I agree with Brett as well in saying that, I think there is some opportunity here with a company like Micron that actually reported pretty good revenue and earnings for this quarter, just had some future forecast. I don't take that as more of a warning, but more of kind of an opportunity down at these levels to maybe take a piece or take a chunk. I mean, the biggest thing that's happening with these semis right now, especially the domestic ones, is this $52 billion bill that is in Congress right now that would help subsidize American producers.
Logan, you wrote that Micron has a great balance sheet. So here today at 53.74, you'd buy it?
We're looking for opportunities to buy it. I think we want to wait a little bit, give it a couple days into this second half of the year and look and evaluate, okay, is it going to continue to go down? Where is this market going? But you're right. I mean, they have a great balance sheet, 15% debt to equity, and currently they're trading at about a 7 PE. So I think there is opportunity in these domestic producers similar to an Intel. Micron is in kind of the same boat. But I want to see kind of what happens in Congress and how these bills go in the next coming weeks and days.
Yeah, there was a recent article in Barron's. AMD is the chip stock to buy for the recession. Brett, what do you like?
We actually prefer NVIDIA, really. It's a premium name in the space. They've had a really long-term growth story and that their data centers and are entering a ton of other product cycles, whether it's video games or crypto. And we really do view data as the new gold. And if that's true, then semiconductors are really the pickaxes of the gold rush, which is really where the money is made. So that's where we like this. It's still, can be argued that it's an expensive name, but they've proven to be a leader in the space, and management just continues to execute just exponentially.
Yeah, understood. Logan, what do you like? I mean, there's so many names in this group, big and small.
Yeah, there is, and Brett's right. This space is going to be available for a long time. Semiconductors are not going anywhere, and they're going to be around for a very, very long time. So I think there's opportunities kind of across the board here. Pick and choose your different places. We like the domestics here, and we're looking at potential buying opportunities for those.
Oh, so you like domestic versus foreign. So versus
yeah, so
like
maybe
Asia.
Micron, Intel,
right.
Things like that. Yeah.
Right, understood. Why is that?
I think it's just because the emphasis on domestic production that America seems to be taking. And if this $52 billion subsidy can go in, these companies are going to expand, they're going to grow, and they're going to increase their presence, especially with America probably trying to lower our reliance on Taiwan and Taiwan semiconductors.
Yeah, I figured that's what you were playing on, the fact that they are trying to push this more here at home. So, Brett, at this point now, even though rates likely to go higher, I know they've pulled back some now, but likely to go higher, and that sometimes hurts tech stocks overall, you still like the group?
Yes, we do. Look, Semiconductors are expected to grow to a $660 billion industry over the next few years, and that's above average returns if we're looking at markets. So ultimately, it's a space that we like to be in. There's going to be some short-term volatility because of this weak macro backdrop, but over the long term, if you look at a 3 to 5 year investing period, we do think that this group stands out. And again, chips are in everything, and it's only, we're only using more and more technology, so it's definitely an industry we want to be in.
Brett, do you have a big tech-based name that you guys just like a lot, not necessarily in the semis?
We like a lot of the mega cap names right now, like Microsoft. It's a little bit more defensive. These companies have also proven to be very adaptable in the times. So I would say, outside of the semiconductor sector, stick with the large cap names that are proven over time.
Brett Sifling, Director of Get Invested at Gerber Kawasaki Wealth Investment Management, and Logan Gillen, Analyst at Jewel Financial. Thank you both very, very much. Have a beautiful holiday weekend.